This platinum miner dropped 11% in a day. So Impala Platinum, this is for May 21st, 2021, and its current price is about $17.10. So back a couple days ago, basically Impala dropped from $19, just under $19, to just below $17. There's been no news that I can tell for the company in particular. It just kind of seemed that it was pan sell-off, kind of like everything was selling off at that time. Platinum dropped a bit, palladium dropped a bit. To me, it just seems like it's a great deal. So I went through and updated my numbers, but we'll just go through my overall presentation. So who are they? Basically, they're a platinum group metal producer that's been producing for about the last 50 years, primarily in South Africa and Zimbabwe. Yeah. Big driver for that their profitability increase has been the rhodium price going absolutely bonkers, and that's really driving about 40% of their income. We'd had some production updates for 2021. All the production seems to be in line with what they had for 2020. So here we go through the earnings, and I updated the prices, updated the lower platinum price, updated the lower palladium price, and even a little bit lower rhodium price. Kind of offset by a higher gold price and a higher ruthenium price. I was actually surprised by this. Ruthenium went from $460 per ounce to $690 per ounce in the period of like a month. So these platinum group metals definitely have the potential to have lots of volatility to the upside. So with the updated numbers, we're looking at about $11.2 billion in revenue, and I think this is about $100 million less than it was before, which really isn't significant. And then, so we go through mining costs, same thing here. So market capitalization dropped by about $1 billion. It was close to $15 billion, and now it's about $13.7 billion, $13.6 billion. So we're looking at projected earned revenue of $11 billion and projected earnings of $8.4 billion. So we're looking like at an annual yield, if we're just looking at earnings divided by market capitalization, of 62%, which is nuts, and a projected forward PE ratio of 1.61. So looking at based off this earnings, they have a policy to pay around 25 to 35% of their headline earnings into a dividend. So I just picked 30% in between. So with that, it's looking that they're going to be paying a $3.18 share per year dividend. And looking at twice a year payouts, so probably about $1.59 per share. And basically the next payout should actually be getting paid out September 24th, somewhere around there, 2021. That's when it was last year, September 24th. And it'll probably be announced, I'm guessing, in August or sometime around then. The last dividend that they had was somewhere around 66 cents to 54 cents. It's kind of shifted as the numbers gone forward. I think that's just because the Rand US dollar ratio has changed. And that was paid out on March 18th, 2020. So these are going to be the 2 times a year that you'll actually be receiving your dividend as a stock owner. So basically the percentage return I'm projecting is 18.6% yield on what you're actually getting back on your money. And kind of like the 62% is what you're getting a return on capital. So ideally the company should be building itself with those extra earnings and stuff like that. So we have reserves and resources. I updated this. I think before I was just using a gold price to calculate my reserves and resources, but I actually went through and kind of figured out how to calculate a PGM for e-basket price. And currently it is $3,655 per 4E ounce. And basically you just kind of take the 4E ounces, and then I divided them kind of based on what percentage of production they each represent, and then calculated it as just 1 ounce of what that price is. And it's really the rhodium and the palladium price that drive that up. So we're looking at roughly $1 trillion of USD metal in the ground. So it's just like if you take all the reserves and the resources and times it by this 4E ounce basket price, we get about $1 trillion. And just based off the reserves, just off this number, we have 15 years of production. And all this these resources extra here, it's like that's probably another like 70 years of production or something like that. So here I compare Impala to the other major miners. I've been liking this chart, just kind of getting a feel for how all these miners are actually, what their forward cash flow looks like. So we've got Impala with the forward, with the earnings divided by market cap of 62, and this is the same as the 62%. So it's basically 62 cents for every dollar invested. Beats out Freeport, beats out Newmont, beats out Barrick, beats out Sibanye, beats out Anglo American. We go over to the resources, and basically for every dollar invested in the company, you're getting $74 of resources in Impala. You're getting about $11, $12 with Freeport, $8 with Newmont, $5 with Barrick, $123 with Sibanye, and $81 with Anglo American. So it beats out all the kind of other producers, but it is a bit behind, a fair bit behind Sibanye, and relatively a bit behind Anglo American. And this is just my earnings and resources, so basically just times these two numbers together, and you kind of get like a relative valuation of them combined together. So Impala is a really great deal. So we go over to the balance sheet. They have $1.4 billion cash, $320 billion of debt. Net value is basically like $1.1 million or $1.1 billion, and then the previous dividend has been here, so it was about 56 cents. Dividend history here, so they do have a history of paying dividends, which I like, and I think this is going to be going forward, that this number is going to be probably about $1.50 on a regular basis. So extremely profitable company with a forward PE ratio of 1.61. Sibanye has about a forward PE ratio of 2.13. I expect the dividend to increase by about 200 to 300%. I'm estimating $3.18 per share per year with an 18.6% yield. Sibanye $2.63 per share with a 14.11% yield. Extremely low levels of debt. They have some North American palladium production. I think they're extremely well positioned for a high, like because we're already currently at very high platinum group metals prices, and if the platinum group metals prices rises, it's like it's even going to be better. So like they're positioned well. It's like prices stay the same, they're doing amazing. Prices will go up. So it's insane the valuation that they could be having. I think Sibanye is probably still a slightly better deal due to higher reserves and the bit of diversification of gold into gold production, whereas Impala is just focused on PGMs and they just have a little bit of gold side product. Sibanye has about 18% of their revenue coming from gold, so that kind of makes them a bit more counter-cyclical. If the PGM metals came down and the gold price stayed the high, Sibanye would do a bit better in that case. Sibanye also seems to have a very good management team that has done extremely smart things over the last 5 to 10 years with acquisitions and kind of bringing mines that were unprofitable into profitability. But Impala is an exceptional value, and especially with this like $2 like 10% sale on it, I think it's absolutely insane. So definitely a stock that you should look at and think about picking up. But that is everything. Thanks for watching.